Great. Thank you so much for patiently waiting. We are ready to start the webinar. Again, my name is Jasmine Pena. I'm a loan officer here at Greater Alliance Federal Credit Union. Thank you for joining us. Um, so we're going to just give a brief synopsis of who I am and what my position here is. I've been a HUD counselor for the past 12 years or so. I specialize in first-time home buyers, but my niche is community development. I've worked with various grants, including the match savings programs, and I also have financial strategic planning assistance. So if you were to ever, let's say, need further assistance, whether it is for this webinar with renting or refinancing or home purchase, definitely I'm the person to go to. I'm very passionate about rebuilding the communities and social services. Okay, so very nice to meet you all. So today's agenda, we're going to cover a few things. Most importantly, things to consider when either purchasing a home or renting, the cost of home ownership. So those are really, a lot of things to consider. You may not think about it in the beginning, but being that we have this webinar accessible to you all, is going to give you some things to think about. We're also going to be speaking about renting costs, advantages and disadvantages of buying a home and renting a home, what to expect for sellers, buyers, and renters, tips for renting or buying during this coronavirus, tips for moving during a pandemic. I'm also going to include resources in here that would be very beneficial to you. And we're going to go over any questions and answers that you may have as well. Okay, so let's start with what are the things to consider, important things to consider when you're going to, let's say, buy a home. Okay, a lot of it has to do with upfront home buying costs. You have to think about that. Reoccurring home buying costs. So, home ownership also involves many reoccurring debts, just like as renting as well. But you're also going to have one-time costs that you may have with a home versus, when you rent, maybe you don't have as many one-time costs because obviously the rental unit is not yours. Um, so when you're renting, the upfront cost is not going to be as big as the upfront cost when buying a home. And we're also going to go over recurring renting costs. All of this is going to make sense to you within the next couple of slides. So remember, we're going to split this up between upfront buying costs when you're buying a home and upfront recurring costs or one-time costs when you are renting a home. So there's going to be two categories here. So first, let's discuss the upfront home buying costs because this is the largest amount of cost that you're going to consume because buying a home, a mortgage, and so on and so forth, you have to be very well aware of what's going to cost you out of pocket. Okay, so we're going to go over a few things here. First, we're going to go over the property taxes. A lot of people say, okay, so why are we paying property taxes? What is it good for? So property owners or property taxes are for those who own a instrument, right? The instrument is the home, and we usually collect about 6 months increments. So it's basically to compensate the seller for taxes paid on the period between the closing date and the end of the current tax period. So in other words, let's say for instance the property taxes are about um, for instance, in this area, let's say it's $9,000 a year, right? So what we do is that you'll divide that cost by 12. So that's $750 per month. So when you're going through a mortgage application, you have to take that into consideration because not only is this 750 going to be calculated into your monthly mortgage payment, but we have to collect that up front. So we have to collect at least 4 to 5 months. Typically, I say 5 months because by the time that you close, depending in the quarter that you close in the year, um, the mortgage company will have to pay part of the taxes up front. So we like to collect about 5 months. So why 5 months? Because we take at least 3 of those months and we hold it in an escrow account. So that's why we have to collect so many months. So in your closing costs, you have to consider at least 5 months of property taxes. So that's going to cost you just on taxes alone, 3,750. Okay. So that will have to be paid at closing. Now, home appraisals. Why home appraisal? Well, a home appraisal is very, very, very important because they are the ones who appraise the property. They're the ones who say to the seller, well, you know what? Although you're selling your property for 300,000, but you know what? It's only worth 350. So guess what? We are just going to lend you whichever one is lower, whether it be the appraised value or the sales price. Now, you're going to ask me, Jasmine, so what's going to happen if it underappraises? Well, what happens is that you're going to have to go back to your realtor and your attorney and say, hey, this property was underappraised. You can show them the appraisal, and then your attorney will negotiate with the other attorney to reduce the sales price. Okay, but that is something you have to think about. A home appraisal, we typically charge about $475, but it all really depends. If it's a single family home, it's about 475. If it's a two family home, then that appraisal will go up slightly. Okay, but they typically range between $300 to $500. Now, earnest money, that's something else that you have to account for. Earnest money shows the seller how serious you are about buying the property. You have to be very careful with this though. So usually when you find a home, you love it, and you say, okay, to your realtor, I want to put an offer on this home. Okay. So once you say these words, it's very serious. So you guys have to take it very serious. And so with the offer, the realtor says, okay, you know what? We have to show the seller we're serious. So let's give them at least, that ranges. It can be 1,000, it can be $2,000, it can be the whole down payment. So speaking about the down payment is a percentage of the loan. So let's say, for instance, you find a home. The home is about, let's say, $250,000. So if you're going to put 5% of that, that means it's 12,500, right? That's what you have to come up with. Now, there are various ways to be able to come up with that down payment. Me as your loan officer, we can get very creative with that, and we can speak about that later on, or you can also give me a call and we can discuss the details about that, but we can go on and on and on forever. But just to give you a brief synopsis on it, the down payment, let's say for instance, is 12,500. Within the earnest money, you can say, you know what, as opposed to just giving $2,000, I'm going to give you, let's say, 6,000, so that you can hold the money in earnest. And the person who holds this money in earnest is the seller's attorney. Okay, so that is held in a trust. And that money will be given back to you at the day of closing so that you can put it towards the down payment. I hope that makes sense. Okay. And in addition to that, you have to pay for a home inspection. It's not that we require it, but I always recommend for a homeowner, a potential homeowner, to pay for this inspection. So a home inspection is a licensed inspector who's trained to find problems, because a lot of times people just go into the homes and we fall in love with it. Oh my God, it's the perfect space, but we don't know what's behind the walls. We don't know whether or not there's termites, or the beam is structurally sound, or if there's, the basement has problems, or like we don't know what's going on within, the naked eye. And so for that reason, we hire a home inspector, and they range that can cost you maybe between 300 maybe to 500, depending on the size of the home. Okay, again, we don't require it, but it's always important to obtain it, because that can also be used as a negotiating tool. Why? Because they also check the roof, and if the roof needs repair or replacement, you can obtain a credit for that. Or if there's something wrong with the home, you may be able to obtain credit for that, or get it fixed before you even buy the home. So that really saves you money. Okay. Always, always very important. And just make sure that when you hire an inspector, that that inspector has a lot of years of experience and they know what they're doing. Okay, maybe by referrals, or just make sure that he or she knows what they're doing. Okay. Now, let's talk about what are the costs that you have to take into consideration when you are um, buying a home. All right, so utilities. Well, as you very well know, as a owner, you have to pay for everything: water, gas, electric, garbage, recycling, cable, internet, perhaps a lot more. So these costs may vary widely by location and usage. Now, what I would recommend for you to do is, when you're looking at a home and you're serious about it, you can actually call the utilities company and ask, give them the property address, and you can ask them, well, what is the average usage or the average cost for such and such home? And they can give you that information, just so that you can have a good gauge. Not saying that you're going to use the same amount of, let's say, electricity or gas, but at least you'll have an idea of how much your costs are going to be. Okay. Property taxes. Um, your county sets your property taxes. Taxes pay for the schools, the infrastructures, and other critical services. These rates may vary widely by location and often change year to year. So, although let's just say you are in a fixed rate mortgage, you think that maybe your mortgage payments are always going to stay the same for the next 30 years. That's incorrect. Property taxes vary year to year. So we go ahead and we send in an analysis maybe um, every November of every year, and the city will tell us how much the taxes are. And if they go down, then that means that your mortgage payments are going to go down. If they go up, then that means that your mortgage payments are going to go up. Not necessarily because of the interest rate, but because of the property taxes. Now, there are ways that you can also ask for a property tax reduction, but that varies again from city to city and town to town, and it also depends on your age. Okay, so if you're over the age of 62, you can ask for some type of relief, right? So you can ask maybe for a homestead tax exemption or something to that nature, because that can also give you a big discount. Why? Because let's take for instance, the homestead tax exemption will eliminate the school tax because you don't have any kids in school. So that can be a great benefit to you and a great resource. So property taxes, again, they're for local schools, for police officers, for um, the um, the firehouse and things of that nature, and the infrastructure. So you pay 1/12 of it on an annual basis, and each um, tax burden is on each month. So basically, remember how I was explaining to you the $750 previously on a monthly payment? That's what you have to calculate. Just 1/12 of it on your monthly payment. All right. So another item on our list is homeowners insurance. Now, according to the Insurance Information Institute, the annual average is of about maybe 1,161 a year. Okay, so what you do is that when you're buying a home, you have to pay for this upfront. Although it's going to be included in your mortgage payment, but you have to pay for 1 year upfront because you pay for this once annually. So let's just say you find a home and you're going to close June 1st. So you pay the 1,161, and by the way, this is just an average. The better your credit score, the lower your homeowner's rate. Okay? Always very important to keep that in mind. So I've seen it between maybe $700 a year to about 1,100 a year. Okay, again, this also goes by your credit score. So going back to the example, if you're due to close on June 1st, 2020, you pay for the $1,100 a year, I'm sorry. So once you pay that upfront, each month we're going to calculate $91. We're going to include that into your mortgage payment. So come June 1st, 2021, we're already going to have the $1,100 to pay for 2022, and so on and so forth. So that's the reason as to why you have to keep that cost in mind, because that does have to, that does have to be paid for upfront. Okay. Also, maintenance to the property. So now you're not going to have anyone mowing your lawn. You're not going to have anyone um, having a snow removal and basic upkeeps, right? So you're going to have to keep in mind that you're going to have to maintain and sustain the maintenance for the property. Okay. Also, a loan payment. So you need to take into consideration the repayment of the loan, and moving forward it usually takes between 15, let's see, okay, 15 to 30 years. So it is a great benefit to you to just think about obtaining a mortgage, because remember, you're paying the principal and interest payment for 30 years typically, but you can pay it off sooner rather than later. And the quickest way to be able to pay it off sooner rather than later is if you make extra payment towards the principal. So, usually you have to take that into consideration, how much that is going to cost you. So not only are you thinking about just principal and interest, but remember, we also talked about homeowners insurance, we talked about property taxes as well. Now, there is something else called private mortgage insurance that's also involved in a mortgage payment. Okay, and that's PMI. I know you've probably heard this word 1,000 times, but just to explain what private mortgage insurance is. Private mortgage insurance is a payment that you pay every single month if you do not put 20% down payment. Remember, we discussed a 5% down payment initially, but if you put 20%, then you avoid making this private mortgage insurance payment. Now, this private mortgage insurance payment may range. Again, it depends on your credit score. The lower your credit score, the higher the PMI is going to be. Now, this can range depending upon also the purchase price of the home. So let's just say we can give it an average of about maybe between $100 to $300. That's how much it can cost you for PMI. Now, if you obtain a conventional loan, okay? So I know that you've heard conventional loan versus FHA loans. For a conventional loan, once you reach 78%, meaning once you have about 22% of equity of value in the home, then that PMI is eliminated. You don't have to pay the 100 to, let's say, $300 a month anymore. That's automatically eliminated with us without having to refinance. But again, this is another cost that you would have to pay for. Okay. And definitely we can go over this on a one-to-one basis. Now, what are the other things that you have to consider? Furnishing. Your new home is probably larger, so you're going to have a bigger space and you're going to have to spend more money. Now, remember, if you're thinking about buying, do not buy your furniture before you have the home. Because while you're going through the process, we're going to pull your credit one day before closing, okay? And your debt to income ratio cannot go up. So, I've had a lot of borrowers apply for mortgages and we've had to cancel because they decide to buy a new car to put in their new driveway or go to Raymore and Flanagan and start buying furniture to put it in their new home. Meanwhile, their debt to income ratio increases and then we have to decline the loan because now we have to factor in the new costs and then we have to decline the loan and then guess what? You have new furniture and not a new home. So always keep that in mind. While you're going through the mortgage process, it's always important to reduce your debt, not to increase your debt. Okay. Now you have to, take that into consideration. You have to take into consideration the fact that you're going to want new things and you're going to want new furniture and new appliances and everything is going to be new. Now moving arrangements. That's another thing. If you don't have family members or friends that can help you, this ranges. So for a one bedroom, it's going to cost you maybe between $200 to $500 because it's going to take about 3 to 5 hours to get you out of the apartment. Two bedrooms is going to take between 5 to 7 hours, so that's going to range between $400 to $700. A three bedroom is between 7 to 10 hours, so it's going to take it's going to cost you about maybe $560 to $1,000 and so on and so forth. Now, at the end of the presentation, I'm going to include a URL that's also going to help you just in case you decide to rent a U-Haul, right? Because that also is an option. Now, keep in mind that when you do rent a U-Haul, um, you're always going to see that advertisement of $19.99, but that is the cost. But in addition to that cost, always factor in that you will always have to pay per mile on gasoline, right? And per mile, whatever they're going to charge you. So it's not just going to be the 19.99 or the 29.99. It's going to be much more because you have to factor in the miles going back and forth. They're going to charge you for that. And you're going to have to fill the tank back up, just like when you rent a vehicle. Okay. But going back on the URL, there's going to be a clip there so that you can have a resource for boxes whenever you want to move, whether it is to rent a home or to buy one. Now, repairs. As a homeowner, you're going to be responsible for anything that breaks down. So, damage, typically the damages are not covered by the homeowner's insurance. The only thing that realistically is covered by homeowners insurance is the roof. But remember, if you submit a claim, it's just like a car insurance. Your homeowner's insurance is going to go up. All right. So you always have to take into consideration that while you're living in an apartment, the landlord is the one that usually makes the repairs. But if you own your own home, you're going to have to pay for your own repairs. Okay. Now, let's discuss the upfront costs for renting. Okay. Um, And I want you guys to really think about this part of the presentation because a lot of people say, okay, you know what? Depending upon so much money that I have to pay for security deposit, the first month's rent, might as well just buy a home. And sometimes that's true. A lot of the times, let me say, but other times maybe not because it all really depends on where you are financially and with your credit worthiness. Okay. So typically with a security deposit, as you very well know, landlords require a month and a half's rent. Okay, a month and a half's rent for the security, and in addition to that, a month's rent. And we all know how costly a month's rent is. So you also have to take into consideration the realtor fees. Sometimes you have to pay for it, but other times the landlords have to pay for it. So that's another month. So altogether, it can cost you 3.5 months of rent just to be able to get yourself into a rental unit. So let's just for, argument's sake, let's calculate that. Let's say your rent is 1,500, times that by 3, that's 4,500, right? So, um, 4,500, so that's a total of 5,250 that can go towards a mortgage, okay? And you're actually paying for something that's yours, right? So while you're renting, you're really paying someone else's mortgage, right? So let's just say you sign a lease for a whole year, and let's just keep the rental payment at 1,500. You're going to spend $18,000 towards a unit that's not yours. So right now in your minds, what I would like for you to think of is, okay, so how long have I been in my current unit? How long have I been renting here? And how much am I paying per month for rent? And calculate that, multiply that by the amount of months that you've been there so that you can have a visual on how much money you've spent thus far. Okay. Oh, and moving costs, obviously, you have to calculate in there. All right. So, what are the recurring costs of renting? Um, 1 month's rent, right? Cost number one is a month's rent. So, unless you live in a rent controlled neighborhood or a city with strict renter protection laws, your rent can increase whenever you sign a new lease. So, it depends. If you go into a unit where there's multiple apartments, usually the rule of thumb is that, your rent may increase by maybe 2%, 3%. It really all depends. And this is per year. Okay, so you have to keep that in mind. Pet rent. Oh my goodness. I can't tell you how many people are charging for this. Um, so instead of a pet deposit, some landlords charge pet rent. So that means that you will have to pay maybe between $10 to $40 per month, depending on the dog or the cat and how big the dog is. This is something that you will have to pay. What I've also seen is now a lot of landlords are charging for mailbox usage per month and parking space usage per month. So these are recurring costs that you would have to think about. Renters insurance, right? Renters aren't required to carry renters insurance for their possessions, but it's highly recommended to protect against loss due to theft, fire, and other, items that may come to fruition. All right. Now, one of the other things that I do see is that when you're moving into a condominium, let's just say, or a large renter's unit, um, they are requiring at least for you to have homeowners insurance. Anywhere where there's home HOA involved, homeowners association, they're going to require you to pay for 1 year of personal homeowners insurance. And that policy may range. It can be maybe $50 up to maybe $100 a year. Okay, not a month. This is a year. Um, so keep that in mind. Anywhere where you see there's an HOA involved, you will have to pay for personal homeowners insurance. Okay, utilities, that may vary. It depends on the dwelling. As you very well know, if you have a larger apartment, the utilities are higher. Now, one of the questions that you have to ask when you're renting a unit is if whether or not the utilities are included in your rent. Okay. And if it is included or if it isn't, you have to ask and see in your lease and double check that it either is included or it isn't included, because this way you protect yourself. So always obtain that lease and see what is included in your monthly rental payment. And if it's not, and let's say for instance, there's a month that you receive a bill, you can dispute that. Okay. Also keep in mind the laundry. Many rental units do not have a laundry machine, so you would either have to find a nearby laundromat and use a coin or a card operated machine that's on site. There's some units that also do have it, well, depending. So if you go to a house and you're renting for, an apartment from there, The majority of the times they don't have it, but usually when you rent like in a condominium or in a large building, they usually have them in the basement, and then it's coin operated. So that's another added expense. Now let's discuss the advantages of buying versus renting. Okay. Um, when you're buying, you have the sense of community, really. So basically, you fit in the community, you take a look at your surroundings, you want to maintain the upkeep of the property. So you have this security that's yours, right? This is your home, this is your house. You have to take very good care of it, and it's a prideful thing, right, to own a home. It's the American dream. Now, you have that advantage of customization. Um, of the property, so you don't have to ask anyone permission if you want to paint a wall, if you want to um, make holes or rearrange certain things in the home. You don't have to ask anyone for permission. There's no landlord involved. You can build the equity. Um, and building equity means, let's say you're paying 1,500 towards a mortgage of 250. Eventually, right, you're going to be making your mortgage payments each and every month. Eventually, your debt is going to get to 200, then 150, then 100. Eventually, you're going to pay off your mortgage, right? And then is all you need to worry about is paying for property taxes and homeowners insurance. If one day you decide to, let's say, refinance to cash out, you can do that. You can have some money built inside your home. So it's not only a 401k that you may have, it's not only a retirement. This is also something that you're paying into that you're going to see the benefits of later on. You're also going to have tax deductions, pride of ownership, just like we talked before. Um, and you're also going to have a fixed rate mortgage, so that gives you some payment stability there. Again, remember, we discussed that your mortgage payment might go up or might go down depending on the property taxes, but at least you know that you're paying into something that's yours. Okay. Um, Now, the advantages of renting is that you can easily relocate. So if right now you're at a job that um, you have some uncertainty, you don't know what you're going to do. Either you're going to stay in the state of New Jersey, or maybe you want to move to South Carolina, or there's a job opportunity in Florida. You can easily relocate. The other reason as to why it's an advantage is because you have the market freedom. So let's say you find a home, or let's say you're in the market and you can't find a home next month, or find another home, let's say 3 months from now or 6 months. You have that freedom to be able to continue to shop around without having that strain of not knowing where you're going to be had you own a home, or you have to sell your current home to be able to get yourself into another home, and everything has to be done simultaneously. So you don't have that burden of selling and buying at the same time, because you're going to be relocated and you're not going to have a home in the interim. Okay. That credit flexibility. So while you're renting, you have the option of fixing your credit, right? So if your credit is not up to par, then you have more time to be able to increase it so that you can get a better rate. Less upfront costs, obviously the down payment, the security deposit, the first month's rent, those costs are lower than having to come up with a larger amount of money for a down payment on the home, right? And you don't have to worry about the maintenance or responsibilities like we discussed before. So you'll have someone mowing your lawn. Um, if it snows, you don't have to shovel. Or if something breaks in the house, if you need a light bulb to be changed, you don't have to worry about any of those things. The landlord would take care of it. So, what to expect from renters, sellers, and buyers during this pandemic? So, this is a really, big topic going on. So, rent prices and inventory. So, rent prices, much like home value sales, have remained stable during this coronavirus. Um, so, you're not going to see a lot of change with that. Okay. What you're going to see, though, is landlords have focused on preserving occupancy rates over the past several weeks. So available stock could slump in May and can go further down in the summer as they renew the eviction cases. That takes time to resolve once the bans expire. So, in other words, right now there is a law that kind of protects the renters for about 3 months. But my concern with that is that at the end of the third month, if those payments haven't been made, then what happens? There's going to be a big trend with people selling their homes or people renting. And what's going to happen with the borrowers who moving forward would like to refinance the home or whatever the case may be at that point, or what's going to happen with the renters. Are you going to be able to stay in the home for those 3 months and will you have to repay, or how are you going to be repaying those 3 months that you weren't able to rent? So right now the housing market has taken a slight dip, so the values of the home have decreased. Okay. Right now, there's a lot of buyers that have had their offers accepted because there aren't a lot of people shopping around right now because of their employment, because of their credit, and so on and so forth. So right now, the housing market has been reduced. And there's not a lot of inventory. So that's another concern right now. So let's touch upon this. So home selling prices and inventory. Um, Realistic asking prices. Those who are now entering the market are setting realistic asking prices. So the prices for the homes right now are not as high. The sales are actually quicker because others are bracing to ride out the uncertainty, and there's a lot of quick sales. And in addition to that, a lot of loan officers, being that they're working from home, are putting in extra time. The processors are putting in extra time. The underwriters are also putting in extra time. So, whereas normally when you submit an offer and your offer is accepted and you send in the executed sales contract, you can close within 30 to 45 days. I'm seeing a lot of closing now in 30 days because the buyers are very anxious. They're sending in their documents quickly, so the sales are becoming quicker. I'm closing loans in 30 days. That's the new trend. The offers, accepted offers, they wouldn't have had a year ago. So offers are beginning to consider below asking offers, whereas they were rejected a year ago or less. So maybe 4 months ago, 5 months ago, there's a lot of offers that were rejected, but now a lot of homeowners are reconsidering those offers at a lower price because obviously the market has gone down and there's not as many people going out there buying homes. Okay. Now, how will social distancing affect the real estate market? What to look for in May is whether people are becoming comfortable with social distancing protocols for real estate transaction, and if listings will begin to rise as a result. So, with the social distancing and everything, a lot of realtors are turning to different ways, different medias to be able to show the homes. And we're going to enter into that into in a few minutes. Okay. So, according to the recent Gallup poll, only half of Americans believe it is a good time to purchase a home. So, charting a new record, a low slump of 10% compared to about a year ago. access to mortgages, many lenders have now tightened their mortgage application requirements. What do I mean by that? A lot of lenders are asking for higher credit scores and a larger down payment just to safeguard the liquidity, which is shunned by home buyers nowadays from the market in a time when interest rates have remained at record low levels. So in order to be able to secure these loans, um, the conditions and the protocols have actually increased. So whereas before we were accepting a credit score of maybe 620, that was the minimum requirement. We're seeing now is that it's a better idea to look for homes once your credit score is maybe 660 or above, just so that I can give you a visual on what we need, okay, moving forward. And we still have the 3% down payment program, guys. Don't get me wrong. We still have that available. Um, However, depending upon your credit score, we're going to probably require more. So it may be 5%. Again, it all really depends. Please give me a call with regards to this so that we can enter into detail. It's on a case by case basis. So lenders so far at least have been a bit cautious, and borrowers may find it challenging to get a mortgage if they're able to find a property that works for them. Okay. So if you have a job and if you feel that moving forward you're going to maintain and sustain your employment, it would be a good idea to buy now. Okay, 5 tips for renting or buying during this pandemic include the following. I love these colors, by the way. You have to hire a knowledgeable and informed realtor. Make sure you do your due diligence in researching how many years the realtor um, has been practicing realty. Is it a part-time? Is it a full-time realtor job? So very important for you to maybe have someone that works full-time as a realtor, because this way, they only get paid if they close. So they're very hungry. So they're more than likely going to work double the time for you to be able to get you into a home sooner rather than later. Okay. Explore the neighborhood by foot or in the car. So remember, guys, when you see a home, don't just look at the home by itself. Drive around in the morning, in the afternoon, at night, just to see what the surroundings are. If there are people hanging out, or um, maybe things that you didn't see when you went to the open house are going to be there. Maybe, let's say, noise levels and things of that nature. Just make sure that you walk around, is what I recommend. Just park somewhere at the next block and just walk around the neighborhood, walk around the house, and get the feel of it. Okay. um, the browse real estate online. So maybe you can do a Google online as well. Have your realtor perform a live virtual walkthrough of the home, and get pre-qualified for a home. That's very important. So what I would say here is that if you're going to be pre-qualified, that would be the first step if that's what you're looking for into doing. So whether you are renting the home or buying a home, this is always very, very, very important for you to do. Always get the feel of where you're going to live moving forward. Now, number one, hire a knowledgeable and informed realtor. That's one of the things that I highly recommend for you to do. The best thing you can do as a home buyer during the coronavirus pandemic is to hire a trustworthy realtor who can advise you on the current situation in your local community. The buyer's agent should be aware of all orders and restrictions happening in your area and should have a thorough understanding of how that impacts the home buying and selling process. When hiring a realtor, be sure to ask them these 3 questions. Are they able and willing to tour real estate for you? So to take a tour real estate. So meaning, are they able to go to the house before you go? Okay, so you want them to take a good visual and see if whether or not it meets your needs, right? Because you're going to have a wish list. So you're going to want to have them go in first, see whether or not it if your wish list, if it checks off all of the things that are on your wish list. Do they know how to harness technology to carry out showings? So do they know how to use Zoom, right? So while they're in the house, taking a look at your wish list, can they use Zoom or any other type of, FaceTime or anything else to show you the house while they're in there? And are they following all COVID-19 best practices? Are they wearing the masks? Are they following orders and community leaders? So, more than likely they're going to use their face masks and their gloves and things of that nature because they're going to want to protect themselves as well. But just to make sure that they're going to be utilizing all of these things while going into the home. Okay. Um, also, okay. Number two, real estate online via real estate marketplace. So before asking your realtor to conduct virtual tours of multiple homes, you can search on realtor.com. You can find properties right on your computer. All right, so you can do that basically yourself. Okay. Number three, have your realtor perform a live virtual walkthrough of the home. So with the coronavirus precautions in place, you may not be able to physically walk through the home with your agent with multiple people. Now, as of a month ago, the governor has allowed you to go into the property with the real estate agent, but just one person can go. Okay, so you can't, if you're married, your husband can't go. It's just, or the wife can't go. It's just one person that can go into the home just to view it. Okay. With a virtual tour, a real estate agent will walk through the home with a video camera, allowing buyers to see and experience the home without having to be there in person. This is very, very, very important. Guys, remember, this is accessible to you. If it's a good real estate agent, they would be able to do it. So, unlike a pre-recorded virtual tour, a live walkthrough showing lets buyers interact and ask questions throughout the tour. So, as a real estate agent is inside, you can tell them, open this door or open up the closet door. Let me see what's in there. Take a closer, zoom a little bit more on the heating unit. Or, it's very interactive. It's very important for you or your real estate agent to be able to do this for you. Um, what they're doing is that they're using the 3D interactive property scans, um, Matterport, Cubics, and iSpy 360. It's amazing what they can do nowadays. It's like you're virtually inside of a game. I mean, you can see everything just with a click of a finger. And it's kind of like 3D, so it's like you're feeling yourself inside the home while doing these while going 3D interactive. So it is doable, guys. And if you do like the house, once you explore it via 3D, then you can schedule an appointment and say, okay, you know what? I want to go see this house before you can submit an offer. But before you can submit an offer or take a look at it, you have to be pre-qualified because no realtor is going to take you into a home without knowing if you can qualify for a home. Okay, so it's very, very, very important to do this step first, the pre-qualification. So, as I mentioned, before, explore the neighborhood by foot or in the car. I always say by foot because you can get a real feel for it, but either or will work fine. So if you're interested in working in a property in your local community, again, there's a shelter in place, but it's possible to walk outside while maintaining social distancing. Remember the 6 feet. Consider exploring the neighborhood and street by foot. If walking through the neighborhood isn't an option, then we recommend conducting an in-person driving tour of the street that you're interested in. Okay, it's very, very, very important. Also, take a look while you're doing that about major highways. If the home that you're looking on is on a main street, then there's going to be a lot of traffic going in and out. You're not going to be able to experience that virtually. So that's why it's important for you to go ahead and do the tour on foot, because those are just little things that you may not think of while you're looking and falling in love with a home virtually. It's always important to also get the feel. Are there a lot of cars coming, back and forth? Go at 5 o'clock when um, that's you can experience the heavy traffic. Is there a highway in back of the house? How bad is the noise? Does the noise echo? So these are things. Is there a school nearby? Are there going to be a lot of cars being parked, either by your driveway or on your driveway to be able to get the kids from school? So these are all things you have to really think of. Obviously schools are closed right now, but they will reopen one day. So keep that in mind, whether it is now or later that you're looking into buying or renting. Um, get pre-qualified for a home. Now, given the ongoing coronavirus pandemic, sellers may be hesitant to allow agents in their home. Okay, especially the seller is currently living in the property. So at the very least, sellers will likely only allow pre-qualified buyers, like I was telling you before, to go in there with their agents. Also, according to the recent rules, only one buyer can go into the home. Okay. If you're a serious buyer, then we recommend obtaining a mortgage pre-approval before asking for these tours. So the difference between a pre-qualification letter and a pre-approval letter is the pre-qualification letter typically it's still going to allow you to look at a home. Um, when I issue out a pre-qual, 95%, I say 95 to 97% of the buyers can see the home. In very seldom cases, the realtor is going to ask for a pre-approval. That takes more time because an underwriter will have to take a look at all of your docs, pay stubs, bank statements, last 2 years taxes. We have to take a verification of employment, so on and so forth. So that process is a little bit lengthier and a little bit more complex. It's still doable, but typically with a pre-qualification letter, you're able to do this. You're able to take a look at homes. You're able to place offers on homes. Okay, so it's very important for you to know. Now, tips for moving during the pandemic. Um, Avoid cardboard boxes. The virus can remain viable in cardboard for up to 24 hours. But if you do move forward with a cardboard box, then, always Lysol, use Lysol. You have to be very, very, very careful. If you're able to do it, and if you have a backyard, maybe keep it outside. Keep these cardboard boxes outside, maybe for 24 hours. Um, and then you can bring them inside. Pre-move virtual surveys. Ask if a mover can perform a virtual survey instead of coming inside of your home. Maybe you can do that as opposed to, having them come in and just give you an assessment of how much it's going to cost you to move them all out. Sanitize all surfaces. Have plenty of disinfectant sprays and wipes on hand during moving day. Um, Make sure you wipe everything down. Make sure you do that. Ask your movers to wear their gloves and masks. Do not allow them to take that off, okay, at any given point in time. Maintain the social distancing, waiting outside while the movers move all of your belongings in the home. Um, Obviously, you're going to want to have at least one person inside just to make sure that everything is running smoothly inside, but not having a lot of people inside will definitely help, and just keeping that social distancing, 6 feet apart. Keep that in mind. So yes, you can have the movers come in, or if you have family members that are going to help you take their temperature, or just encourage them to use the gloves and the face masks as well, okay? Because you never know. There are people who don't have any symptoms and are COVID-19 positive, okay? So again, Lysol, wipe everything down. Cardboard boxes, it lives in there for 24 hours. If you can use garbage bags, that would be great as well. Um, so keep that in mind. Now, so should you rent or buy? Keep in mind, if your credit is not up to par, if your credit score is not at least 660, right? If you don't have the monies saved for down payment and closing costs, if, let's say, for instance, you just don't know about your job, you have a lot of uncertainties with your job, you don't know whether or not you're going to be employed next month or the following month, right now is not the time to buy. Okay, you have to have employment in order to be considered for a mortgage. Unemployment benefits is not considered to be verifiable income. So just it may be a good idea to just hold off, because also if you do become unemployed and you find a job, let's say, you know, um, an hour away, you may want to buy somewhere closer to your job. So keep that in mind. If you if your credit is not up to par, we do have a resource for you with Green Path. You can give them a call, and it's for free um, if you're a member. They'll be able to get you mortgage ready. They'll help you with your credit score. They'll give you a client action plan, um, and they'll get you on your way to home ownership. Okay, so let's talk about all of the um, resources that we have available. With GreenPath, you'll have the free financial coaching. So your counselor will focus on your concerns, anything that you may need help on, customizing a budget, a detailed action plan, and it's all based on your financial goals. Okay. Um, they're also going to give you a proposed budget too. And a proposed budget is they're going to run an analysis on what your true and actual um, expenses are nowadays, and what will a proposed budget is what are your costs going to be, and what is your financial analysis going to look like once you purchase a home, including the principal, interest, taxes, and homeowners insurance. So they're going to give you both. Okay. Um, it's also there are HUD counselors, right? So it's an approved counseling organization that can help you with a pre purchase education, um, counseling, foreclosure prevention issues, laws, and things of that nature. A HUD counselor is always good to have because they can educate you on resources. They'll run your credit, but when they do it, it will not affect you at all whatsoever because they're not a financial institution. Okay, they will run a soft pull on your credit, tell you your credit score, and tell you what is it that you need to do in order to increase it. Okay, and again, this is for free. Now you can utilize their services month after month after month until you feel ready. Once you feel ready, you can give me a call and I'll be more than happy to do the pre-qualification letter for you. In addition to the education and helping you achieve your goals, they're also going to give you what is called a certificate of completion, which is what you're going to need if in order to qualify for down payment assistance if need be. Okay. They can also get you into debt management plan if that's what you need. So let's say you have a lot of credit cards, you don't know what to do, you're overwhelmed with debt, you want to get everything in line and you want to start paying them off, they also have a debt management plan for you as well. Okay, so you can give them a call. It's a free consultation, 877-337-3399. Okay, guys, whether it is that you're looking into buying or you're looking into renting, take advantage of these free services because typically they run about 150 or more. So give them a call. They'll let you know exactly what you need to do. And in addition to all of this, they'll give you applicable resources. So if you do not have a job and you're looking for a job, they'll give you resources for employment. If you need assistance for down payment, they'll tell you where to look for the down payment assistance. If you need assistance for your electricity, your utilities, they'll give you resources for that as well. So again, it's always really good to have a HUD counselor by your side. Okay. So I know we don't have much time. We maybe have 3 minutes, but let's go over some questions and I'll go over the answers with you. Okay. All right. So I'm going to give you guys at least 1 minute to or two just to type in some questions in here. Okay, nothing yet. Please, any question is a good question. So now is the time to ask. Are you going to have this PowerPoint available so that I can show my wife? Yes, we're going to send you this PowerPoint um, once we complete the webinar today. Absolutely. And my contact information will also be there as well. You can email me, call me, any questions, any concerns on how to get you ready either for home ownership or what you need to do or what resources are out there. I'll be more than happy to answer those questions for you. Okay, how is the best way to schedule a virtual tour with a realtor? Okay, so it depends. If you are interested in buying a home, then you would have to obtain a pre-qualification letter because remember, you don't want to go into a $500,000 home when you're only able to afford a $300,000 home, right? So you have to have an idea, a gauge of what's your buying power. All right. So once you obtain that information, then you can show your realtor your pre-qualification letter, and then they'll be able to find a home. You'll be able to find a home um, at that point, okay? Because they're going to know what's your buying power. Okay, so that's what you need to do. You need to get that pre-qualification letter ready, which I'll be more than happy to do that for you. And then you can schedule that virtual tour. Do you think we will require more down payment in the future? That's a really good question. Again, it really all depends on your credit. So if your credit score is high, then we won't require as much down payment from you because, your credit is good. So a lot of lenders, they may want to require more down payment, but for right now, we still have the 3 to 5% down payment protocol. Okay, you're welcome. Anyway, I can learn more about how to buy a house. What are my expectations? Give me a call. Give me a call, and I'll be more than happy to guide you and let you know what is it that you need to know in order to buy a house and how to prepare you, how to get you ready, and um, what to expect. Okay, moving forward. Okay, and I think that is it. All right, guys. So thank you so much for attending today. Please remember to follow us on Facebook, Twitter, YouTube, and Instagram. We will send you a link of the recorded session, or you can view it on our YouTube page. Again, please visit us online to learn more about upcoming webinars. Contact me to schedule an appointment. Again, my name is Jasmine Pena. I'm always going to be here for you. My phone number is 908-210-1147. or you can also call our 1-800 number, 800-963-1937, or you can also schedule an appointment by going online. Okay, thank you once again, everyone, for joining,